I'm back on YouTube. If you aren't following me there, please do. I'm going to be posting lots of stuff. Here we go. All right, so you want me to talk about ARM with the Qualcomm news. Remember, news always falls along the line of least resistance, right? Unless it's changing a pattern. That's always key. Let me pull up that ARM chart here. I think a lot of this stuff is also moving on Lam Research today. That was an interesting quarter. Believe it or not, I actually used today's opening pop to book some NVIDIA. Some options I had. I was playing for the breakout on that big power pump, and it was working right away, but then it kind of slipped back below the waves, and I was a little worried about it being a look above and fail, so I'd rather it really clear. We're in this like responsive market, right? Where breakouts are not happening. I mean, for the most part. I mean, there are some exceptions, of course. Yeah, I was just looking at Palantir today, too. I remember that stock was like, it seemed like it was $20 a couple of days ago. Sorry, I'm drinking some coffee. Anyway, all right, let's get going. So if you come in late, you could see the rebroadcast either on my Vimeo channel, on YouTube, or even just here. It'll be up. So a few things I'm noticing with regard to the markets. SPY actually had a trend break yesterday. We had been talking about the market riding this rising wedge high and just higher and higher, and we were getting closer and closer to the apex. And I had said in textbooks, I guess they get to the apex, but in real life, usually there's some action sometimes before. Right now, the break is below the 10 MA, which is currently 581.70, but is holding the 20 MA. Yesterday, we had a pump below it, but it held the 926 breakout at 574.71. But today actually stopped on the dime, basically, on the 20 MA at 576.74. So it's a very simple setup, I think, here. Inside of this little narrow band, it's just neutral. Below the 20 MA, I'd push the short button. And if we took out yesterday's low, 574.42, I'd press it for a move down to at least the 50 MA, I think, to 566.32, and likely a test of the neckline breakout at 565.16. And that then could be setting us up for a head and shoulders pattern. We're a long ways away from that. I posed that in my most recent weekend video, but it is possible that that does take place. So super simple, short below 20 MA, press it below yesterday's low, and on the upside, long above the 10 MA, and guess what? Press it above yesterday's high, 581.71. I usually like to use, in context, this is a big body candle range. It's sort of how I think about earnings day ranges or Fed day ranges, where I'm neutral inside of them, incrementally more bullish or bearish, depending if we're above or below VWAP. But I usually like to be long above or short below. The Qs are a little different here. It's a bit of a different beast because we still held trend yesterday, and we have the higher low today, what I call the dubstep, above the 20 MA. Same setup here, though. Long above 10 MA, 493, press it on up over yesterday's high of 494.25, and I would think that would at least go to the 498.5 reference high that we had on 1015. If we start losing low of day, like tomorrow, let's say, I'm guessing that longs have a raised stop now to today's low, and it would be a trigger for me for a short below 489.44, and then I would press it below either yesterday's low at 495.25 or the 78.6 of the old range at 486.39. And then we'd see, because we'd be coming up right on the trend line. So if it fires through there, the ideal scenario here, of course, would be a gap and go below trend, right, on the downside, or a gap and go above the most recent range, taking us back to the wedge high. By the way, if it did get to wedge high, let's say tomorrow, it's 500, 550. On the downside, if we were to do that, I think we'd fill up the shorter term pennant. I drew in a trend line. I wish I could show my screen on this. That would be like the ideal. I'm going to have to figure something with that out. If you look at the 10.2 low and you connect it, I just did it to the 10.7 low, but if you want, you could use the 10.16 low. I would think that we would fill up the pennant down to the 477.40 and maybe 473.82, and then I'd cover the short and probably look for a reversal, at least for a short-term bounce. One of the things that's kept me on the sidelines with the getting too bearish is just VIX cannot get it going, right? Anytime they pop it into the 20s, people are pumping it out, selling the premium. I ultimately think low volatility leads to high volatility, just like high volatility leads to low volatility, sort of how economics works, high prices and supply adverse demand, right? Higher price, less demand, but more supply, so the price comes down. Anyway, if we get below 1863, that would be today's low. I think we could pull back, but I only would really feel comfortable. Unbelievable that got cut off. Sorry about that. I got a phone call and it kicked me out of the, even though I declined the call, it still kicked me out of the live. Super, super annoying. We had a lot of people in there too, right? I think a lot also the last few days has been the dollar, the resurgence of the dollar. We're not into like danger zone levels yet, but it's getting kind of close, right? The 104.636 to 105.01. Today we're getting a bit of a back off. My guess is we could pull back to 103.567, but any day that we have sort of the reversion to the mean trade for the pain trade, which I coined a while back, which is higher dollar, higher interest rates, and higher oil, that I think puts the algos into sell mode. Oddly enough, today we got the pullback with the dollar and the market, but market is rallying. I do like that there's a higher low today in the tape too. And in the last broadcast, if you're new to this, I had said I liked that we had a dubstep setup here. So I guess we'll do a little reiteration because we had to restart the broadcast. I said that we had a dubstep setup here in both the Qs and SPY, and I liked being long above the 10 MA, press it long over yesterday's highs, short below today's low, press it short below yesterday's low, because today's low is basically the 20 MA, and I think the setup is the same for the Qs and for SPY. So if you missed those levels, just go back and rewatch that broadcast. But one of the things that's been, I guess, frustrating for bulls is that a lot of these earning pops have come up to reference highs. JP Morgan, for example. The old reference high that we had inked on 8/30 was 225.48. We came right up to there and it couldn't clear. You had actually a couple of mini look above and fails. Usually if you have a look above and fail of range, you can rotate down to the end of the bottom of the range. I don't know if we're going back to 200, but it wouldn't surprise me to see some type of a check back to like 217, 218 for instance, or maybe even the 50 MA, 215. So keep that on the radar. I was saying I was long the NVIDIA play, and I liked it. I bought it on that pump when it broke over the 140.76. It just triggered me in, and I had a nice long going in that. But then once it came back below, I used today's pop based on the Lamb research to actually just get out of that break even. So I am looking to put it back on again if we could get over yesterday's high, again, over 142.44, and I have an alert below yesterday's low at 137.45 for the move I think nobody's expecting here, which is the liquidation break and pullback probably to the 20 MA. Remember, we go from fib to fib and MA to MA, and if we went from fib to fib, it would be 140.76 down to 130.05, and the 20 MA is in there at 130.80, so keep that on your radar. On the upside, if we do clear over the 142.44, I think 150 is in play because that would be channel high. If it did it tomorrow, it would actually be 151 at this point. But it is consolidating kind of high and tight, but I didn't love that we saw the move through the high and then the back off, and we've seen that in JP Morgan as well, which I didn't like, and it puts it in context. I mean, even Taiwan Semi, which had really good earnings, has been pulling back. I mean, all of these earning pops seem to get sold. Netflix also, we'll talk about that in a second. But we popped up, and it's just been down, down, down. We ended the one time framing yesterday, but today resumed it. So in one time framing, meaning when an auction is going in a direction, either up or down, where every day is making higher highs or every day is making lower lows, you wait for that auction to end, but so there's an exception to the rule. It can end for one period, but one period only, and then resume in the direction of the one time framing and still be considered one time framing, but it can't do it for two. So I think it's also, again, the same setup here. We're getting close to some probable support. The old reference high from 7-11 was back on 193.47. If it checked back to there, that could be at least a day trade, and I think probably enough of a gap fill to start layering into it. It doesn't mean it's not going to continue going down, it could go to the 20 MA. But I'm looking at that. I mean, Netflix, same kind of stuff, you know. It popped up. It did have one more day of squeeze, and now it's just, you know, riding the old channel high. So if you're long Netflix, I'm very good with using either today's low of day of 746 quarter or yesterday's low of 744.26 as a stop. And if it were to trigger below, I think we'd come down to at least the start of the gap here at 736, maybe an overshoot to the 10 MA at 733.45, and then we'd see. I often think people assume just because you test the gap means it has to fill. Often you'll test the gap or even into it, and if it rejects back up out of it, you can rotate all the way back up to the higher end of the range. It's when you break into the gap and the price accepts below into the gap. Does it suck it down for the gap fill or suck it up for the gap fill like we saw in Tesla today? We'll get to that in a sec. So I'm thinking if this, can hold 736 on pullbacks, it's still okay. But shorter term, I like using yesterday's low because it's a big body candle as a stop. Tesla, we had talked about this in the last few videos, and I had said that it was bear flagging and it should, quote unquote, go lower, right? For a buy the dip back down to the 200 MA. But I also caveated it with if what should happen doesn't happen and it gets back over 226.50, which is the 50% fib, I think it at least fills the gap to 238.77, and that trade obviously triggered, and it's even higher than that now. So I'm not so sure of the squeeze is done. If it fills the pennant, it's 265.86. I actually heard some people on TV today saying that they were actually shorting this rip in Tesla, so they're getting themselves more and more short. The 78.6 of the range is 251.95, so I'm good with that as a stop. The VWAP is 250.34, so we'll see if that rotates up. But generally, pullbacks intraday, intra-candle, I'm good as long as it's above the VWAP. If it's below, it gets a little problematic. And often if there is a move, this is similar to how I, look at futures. If you're far enough away from VWAP, either up or down, there's often a reversion to that mean. Another little trick, just FYI, then that we're back to the futures. I don't want to be all over back to the futures, right? I don't want to be all over the place, but the 200 MA 30-minute is usually my North Star. If we're above it, I'm more bullish. If we're below it, I'm cautious to more bearish. That was my view on Tesla. So someone wanted me to cover, let's do ARM Holdings quickly. It's not one I've been trading recently. I caught a really nice short in that a couple months ago on that big dump. I had a 1x2 put ratio on, and I'll tell you, it took some serious wontons the huevos rancheros to cover the short and leave the overwrite put on, because it was definitely underwater, and I trusted my levels, and I knew how to get out of it. If it was a problem, I'd roll it, and I structured maybe some short calls against it, or even maybe some short shares if need be to neutralize that delta. I usually don't like to go that route, but sometimes it has to happen, or you buy puts below. That would be interesting. The next time something like that happens to me, I will talk about it. It's rare, but once in a while, everyone gets caught out there. So ARM holding. All right, it's coming down. Let's just talk the technicals here, because I think people sometimes get a little bit too carried away in the news cycle. It's often what they like to talk on TV. You technically have a little bit of a trend break, but you're right on the 50 MA here. So for me, the long would be back up over the 20 MA, which should be resistance now, by the way, if there is a bounce, 146.73. Or if you want to remain short below there, I'm good. I probably lower the stop now to at least the high of day, to 143.59, but it's got to hold right here on the 50 MA, or I think it's probably dumped dime to the 200 MA, which was the last key support on 9.6. So you could be looking for a move down to the 128.10. As far as Qualcomm goes, let's take a quick look at Qualcomm. That, and it's weird. Qualcomm and Lam Research have been super weak lately, which is, I don't want to say super surprising, but given how NVIDIA has been, it's sort of NVIDIA and then there's everyone else, right, these days. So, I know they're partnering with, on the AI, but with ARM. But I think Let me see. Are they I forget who they're partnering with. I just saw that it was that they're partnering on AI. I just pulled up I didn't want to, you know what, I'll read it later. But I know that Qualcomm is partnering up on the AI. I assume it's ARM Holdings. That guy asked me about it. So we pumped up to a resistance line at 175.95 to 176.59 and backed off. So again, a little bit of a move up that failed. We're not really down to the true range low, but we're down into some reference lows and maybe even a little bit of a higher low. My thinking here is this is technically, a bit of a bear flag. It almost looks like a head and shoulder, like a big head and shoulders, right? The last, run up, the big head. It actually looks like there was a angle, like a slanted head and shoulders top that moved to the downside. And it's just consolidating here. So my thinking is they're probably waiting on the next earnings to either continue the pattern down or break it up out of the range and negate back to the neckline, probably somewhere between 193.84 and 185.76. So if you want to do like a $10 wide call spread playing for that, I'd be all right with that. I mean, I usually like to be the second mouse because the second mouse gets the cheese, the theory being the first mouse gets its neck broken by the trap, and then the second mouse comes in and just takes the cheese, steps over the other mouse and takes the cheese. The downside move did hold the 2 times range of the top head and shoulders, by the way, at 157.05. If it were to keep dumping, the next big downside target would be 139.26, which is where this all started from back on 2.2, or 134.31, which is the 2.618. So I think for me, I'd probably want to wait to see it break over the 177.59 for the pump up to the 193s. So yeah, that's my thinking on this. If you want to front run it, I'd probably do a Costanza here. If it rallies too much into the number and we're at the higher end of the range, I'd probably fade it if you're playing for that. And if it dumped too much, maybe I'd play for the rally back to the higher end of the range, because that's what seems to have worked for Lamb Research, right? I think that Lamb Research was basically on the range lows. It popped. The pop was very minuscule today, given where this thing has come down from. So what I'd like to do with Lamb Research is either see it consolidate here or clear high of day at 77.48, and then maybe it does fill up to 86. But it should really be there already or on the way, and it looks to me sort of not that impressive. And if NVIDIA starts dumping too, if it can't clear that look above and fail scenario, it could start dragging the whole complex down. And I've been cautioning a little bit about this lately, that usually what you want to see are the Qs leading, SMH leading Qs and Qs leading SPY, and it's been backward, right? SPY's been leading Qs and Qs have been leading SMH. To me, it has worked, okay? We'll leave it at that. It's worked, but for me, that doesn't seem like the most sustainable situation. The thinking being the Qs would probably catch up, and the other stuff is rallying because interest rates were going lower, and their PE multiple premiums deserved a bit of a boost. But now interest rates have kind of ramped up again, and it's sort of, like what now? Take a look at the TLT. We've been looking for that pullback. It did bounce. It's bouncing right where I thought it would bounce. I said between 91.47 and the 92-ish area. So you now technically have a secure low in TLT. Secure low is basically a 3-candle head and shoulders, right? It's a higher low, a lower low, and then a higher low, and then once you take out the lower, the middle bar, the lower low's high. This instance would be 92.37. So if you're long, you could use 92.37 or just 90. I'm good with that. 92.37 is a stop. Anything above that, I think, does continue rallying more, probably at least to the 10 MA, 92.84. But I thought that the bounce on 10.16 probably should have seen the 20 MA, and it didn't. So it tells me that there's still some weakness there. But TLT, I think, has a higher low in the money flow index than it did on the last low, which was before price went lower. So price isn't confirming still lower prices there. And if we do start seeing a bend back up in TLT, where it should from here range low, because it's come down so much, I think that would be very beneficial for maybe a continuation pattern in markets. I mean, I think everyone at this point thinks there's going to be a year-end rally or a rally post-election, which may be the case. It could also be a sell the news, depending on how we trade into it, if we're up too much into it. I'm looking at the 10-year. That, to me, the 4.25 was really an inflection point, because if we clear that, it's right to 4.5. If we break below it, it's going to come probably down to 4. And I think that the more money managers are able to hide out in these instruments and bring in some of these returns, it was more attractive to me when it was 5%. I mean, I was loading up on that all day, every day. The 3 and 6 month treasuries. I mean, that was like bread and butter for me for a year and a half on very large portions of portfolio cash, and particularly stuff I wasn't trading. Anyway, now what I'm using for more liquidity is this Schwab instrument. It's called SWVXX. It's a high yield money market for let's just say under $1 million. There's one for over $1 million. I forget the ticker, but that's for $1 million. I mean, if you got $1 million that you're just keeping in cash, what is it? Salud, Don Corleone, right? So yeah, I mean that's my thinking there. And rates should, quote unquote, come down as long as we're over 92.37. Palantir, that was another request. We'll cut it off maybe a little more after this, and then we'll end it. I want to talk Apple, though. Palantir looks okay to me. It's really close to the old highs, right? I mean, it took all this time to get back to like the post-IPO highs of 45. I mean, the last time Palantir was up this high was, back in 2021, on January 27th. So there should be some responsive selling up here. I don't know that it just powers through. As far as if you're already long, I would trim some here or sell some calls, upside calls, to be maybe taken out of it with a little extra premium. But I would use the 20 MA as a must-hold support, because that's where it gapped above on 9.6. Usually if there's and then it roughly held it on 10.2. It didn't quite get down there, but I view that as close enough for a hold. I wanted to talk about Apple quickly. So Apple also, another one of these, run up back to the highs, look above and fails, and now pulling back. The 237.23, which was the reference high we saw on 7.15, got pinpricked above. It came back down. I had said it was still all right as long as we were above 232.92, but below there short, and here we are coming down. We're a little below the channel. It's not the first time we've seen it below the channel. We did on 10.7 also, but you now have a dubstep under the channel. So what should happen, right, is Apple should go lower here, right, below the 227.76. Maybe the 50 MA is some support at 226.67, but my thinking is we'd probably come down to the 221s, 220s. But if what should happen doesn't happen and we start pumping up, I think over the 10 MA, again, 232.51 is probably a long, and maybe it runs it back up to the 237s, and then we see. I think a lot of this is also waiting on the earnings. If Apple is good on earnings, it could get back up to the highs at the 260, and maybe that's the blow-off move we see in the Qs. My favorite setup, and I almost invented it for Apple, and I've heard a few people copy it from time to time. It's from that movie Talladega Nights, The Shake and Bake, right? Remember that? Great movie, the Ballad of Ricky Bobby. I love when Apple, when there's fear about the iPhone. This happens all the time. I think it's once been right. That the phone is crap, it's not selling well, and the stock comes down, down, down. Everyone's afraid, and then they rip it higher after earnings. So if they shake everyone out, and then they bake it back up higher. So that's the shake and bake play. So it doesn't always play out. I think some people have gotten a little wise to it lately. But if it does play out, that would be the way I'd play it. If Apple's up too much into it, then the risk reward changes. Price is very important. I think one of the mistakes I would make when I was younger would be, one of my big strategies is selling premium, right? I used to love, and I still do, selling puts and or calls, trying to figure out what range we were in, and I kind of get it both ways, and then I would roll up and down accordingly to play with the move, because obviously they both can't be wrong. One's going to be right, so you have to kind of adjust as you go. But I used to sometimes re-up not paying attention to price. And I'd get myself in trouble, particularly if, I got too heavy into the puts. So, because, when people buy on the upside, they're usually, there are some instances it's a little bit more of a stair step higher as opposed to the elevator down when people are panicking. So always keep that in mind, which also has me wanting to impart this to some newer traders. I know I know some of you are really seasoned pros at this point. You've been with me for a really long time, but I know some people are newer. And I always say that there's position risk management, and then there's stay in business risk management. And I think it's good to do this now while the markets are still at highs and you're not doing it in a, hurt situation. I think you could use a 10 to 15% stop loss on both a position and your overall portfolio. And I'll tell you, I've done this before. Sometimes you're just too long or you're just too short and the market goes against you. And once I hit that threshold, usually what I'll do is, except for maybe a handful of positions, I will just liquidate everything and just start over from scratch, because you're not down that much percentage wise to make it back. Once you start getting banged more than that, you have to start having these outsized returns to make that money back. So position management, and then just stay in business management. I think that's very key. And again, I've been trading since I was 18. I'm 46 now. So I have a few years under my belt. It's not my first rodeo on, bull and bear markets. So, take that. I know some people will disagree and they'll say, this time it's different or whatever, but it never is. And at some point, the market will go against you. And I think I've heard that there, at any given time, there's like a 30 to 33% chance that you could blow out your account if you're too big in positions. While we're talking some nostalgia, my cousin and I, we used to joke around that when we were getting to OPEXs, we were usually like, I want to keep it clean, but to the wall in terms of margin. I mean, we were really pressing it, like cowboys at some points. And and we'd be like, try to just get through the maintenance calls, of, the expiration. Sometimes we were close on some positions. So what I do now to manage that is I obviously don't go as heavy with my margin. I keep it much, curtailed. If anything, at this point, I don't even necessarily trade always, or adverse sometimes with margin, depending on the market we're in. And then I will manage positions. Like I used to really want to collect 100% of the premiums. Always. Like I'd always try to ride it to zero. And what I've come to realize over the years, and I do this now all the time, is if you get your move quickly, either you take it off because you've sucked out all the premium, or if you hit your target, book it anyway, because it can often reverse on you and you're dealing with a position of strength versus a position of weakness. Sometimes you don't get the time decay you're looking for. So that could be the case. Another helper is don't go more than, I wouldn't say, if you're buying premium for time decay, I don't like buying the weekly options. I like selling those because the time decay is so fast. I mean, once in a while you'll make some money on those. If I do those, I usually do it with a ratio play where I'm not paying something out. It's like 1/2, either on earnings or an event, or just, because we're close in a range. And that also has its own inherent risks with outsized moves in particular, because you could sometimes have it gun through your lower strike. I actually once had that happen to me on an earnings play on Chipotle back in the day, and it was an $18,000 loss times 2 because I had it in 2 accounts. And I was just like, I was so pissed. That led to me to not trade Chipotle on earnings for years. But, it happens. You sometimes have to be careful with earnings. You get these outsized moves. It was like, I think 2.5 or 3 times, or maybe even more, the expected move. And, I had done like 5 or so earnings plays. They were all winners except that one. And that, just like was a big problem. So, yeah, I actually talked about that in my interview for the Wall Street Journal. They didn't put it in. I wanted to put something in that was a little bit negative, and I thought they were going to put it in, but they didn't put it in. So I'm correcting the record here. There are losers. I have them. They happen all the time. It's just how you manage them, and having more winners than losers, and cutting the losers to be short. You don't want them to run away with you, because it not only hurts your account, it hurts your mind, right? Your mind, you're not in the make money mindset, you're in the defensive mindset where you're managing losers and you're missing the opportunities. So yeah, we all want to be right, but cut the loss, take it, and then be right on the next trade, or reverse your position and, go the opposite way on that particular one. This is like coffee talk here. I didn't mean to get so philosophical and, talking about these I usually like these to be a little bit more in the moment for what's happening in the market, but I think this was a little bit of a good tangent to get into, because I think it probably is more useful for something you can carry forward in your trading as opposed to, just what's relevant today. If there are any questions here, I could take them. You can type it out and I'll see it. I know yesterday when we did the live I didn't enable it, so now it should be enabled. Nothing really? I see a heart. I like that. All right. No questions? No one has anything they want to discuss or talk about? If not, we'll wrap. Unless there's more questions or any. I had a few, I think I had a few in email. I'm just reading a couple of DMs. Yeah, the earlier broadcast terminated, and unfortunately it didn't save, so I'm going to have to do what I did yesterday and do a screen capture later to recover it. It's actually not such an easy process. Hopefully this won't happen with this one, because this one I think was more important than the prior one. But yeah, I know it terminated. I have to figure out a way to fix that. I got a call at the time, and it just took me right out of this. It crashed. It just ended the live. So there's got to be a way to disable that function. These are people for weekend video, so we'll cover that then. I don't see anything particularly questioned for the live. Anyway, there's some other stuff I wanted to discuss. So I'm back on YouTube. Be sure to follow me there. Also, I'm going to do these broadcasts more regularly, but I wanted to open up something, if people are interested, where I would do one-on-one coaching a little bit with people. I do have this as a premium service, a DM service that I offer, and it's usually $199 a month, and we do a call every week, and that's monthly. But if people want to do a package, I'm willing to work with them on that. And to get started, if you want to just see how it works, I'm willing to do at the beginning, maybe like $100 for the call or something along those lines, because I definitely like helping people. And I often find that by the time people get to me, they're already in such a hole, it's very hard to dig them out. So maybe this would be preventative, or if you are in that hole, this will help you do it. More often than not, though, a lot of people, I have a few people on that who just want to level up their game. They've been trading for a while and they just want to get better and they want to go to that next level, and I'll help you get there for sure. So if you're interested in that, just message me. That's something I'm going to start doing more. I have more time now than I had in the prior, last year or so. So yeah, that's something, if you're interested in, just message me about it. And I always have my regular service here, the one for $9.99, where I'm going to be posting more and more trade ideas on there. And then, of course, I have my premium video services. I have one now on YouTube. It's $49 a month. It's going to be the super follower videos and the weekend video to keep the price lower at $49.99 a month. And then I have the premium service on Vimeo, which is $69.99 a month, and that has both the midweek and the weekend video. And I may start throwing in the super follower videos there too. We'll see. So I don't see any more questions. I think we could end it there. But like I said, I'm back doing these lives. We used to do these all the time, right? Back in the day, the Periscope days, but then they got rid of Periscope, but now it's obviously integrated into Twitter for a while, or X, I guess X now. And we'll start doing some more of these. Anyway, have a great rest of your day. Thank you for spending some of that time with me, and cheers.